The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 16th, terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. I mean, really, folks, think about it. Hope everyone out there had a wonderful Wednesday. I know I did. I had the opportunity to spend the day with my youngest. She's going to be graduating from the University of Florida. How about this, folks? With a 3.75 grade point average. Not sure where she gets that from. Not me, that's for sure. But kudos to her. I got a chance to, first time that she and I have played golf. She started taking up golf really within about the past 6 months or so. And almost drove from the ladies' tees, almost drove one of the greens out there. That was pretty cool. It was a great day. In any event, glad to be back with you. Hope everybody had a great day. Of course, you know the easiest way to have a great day, each and every day, it's to always remember that life happens for us, not to us. That's right. When you and I, when we can make that 2x4 exchange, it means that we can find the gift in every set of circumstance that life is going to throw at us. And when you think about trading and when you think about investing, isn't that what it's really all about? It is for me. Also, I'm absolutely grateful for your presence here this morning. I'm here to serve you. Truly here to serve you. So feel free to pick up the phone. Give me a call at 877-927-6648. Internationally, you can reach out to me at 727-445-1044. Many do send emails, Steve at TFNN, so you're welcome to do that as well. This is Terrific Thursday. Of course, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures trading off about 52 points. They're trading out at 17,969. The S&P futures off 7. They're trading at 2,092. NASDAQ off 16. 4405, Russell down about 3 points. And the first question that came in this morning was, is the market on sale? Right? Is there a sale? Is there a sale? Is there a markdown? What's going on inside the market? What's going on inside the futures? What happened yesterday? What took place in the cash index? What took place in the ES Mini? You know, where can we get our best clues? And I say you always got to look everywhere, right? How about that? You know, I was away yesterday. I was kind of interesting. I remember because I was with my youngest, and I remember one Christmas when Super Mario came out. Remember Super Mario? And of course, I remember playing that against my kids, each of my kids out there. Of course, you know, the thing is, and so what the reason why I bring that up is because yesterday, not being here, listening to the radio and the shows and stuff like that while driving up to Gainesville, I guess Super Mario's meeting was interrupted, and all I could think about is playing that Super Mario game. And it was a Luigi, or what was it? I think there was a princess something or other. So since it was a woman who jumped up there, I don't remember her name, but there were a couple of characters, right? Didn't you? We were jumping over things, you were gobbling up stuff. So in the Super Mario game of life yesterday, I guess one of those characters jumped up to pay a visit to Super Mario Draghi out there. Not that I condone that, but it just reminded me. So I've gotten off track here. In any event, and really off track. So I several questions this morning with regard to, hey, what's the market doing? What should we look at? And I think we got to look at everything. I think we look at everything. We see if there's, because what you'd like to see doesn't often happen. What you like to see is some synergy. You'd like to see messages coming from wherever it is that you are looking with regard to whether, you know, you should be bullish, you should be bearish. And it really is going to depend on your time frame charts that we look at. So let's begin by doing that. Now, first, let me just give you an idea of what's going on also around the globe out here. Asia last night, big moves to the upside. You had a 116-point move for about almost 3% inside the Shanghai. Hang Seng taking back some of its resting losses from the night before. Was up 120 points. The Nikkei up 16. Now in Europe this morning, a bit of a struggle. Let's just take a quick peek at that, and then we'll go back and try to answer the questions about what the markets are doing out here. You got the DAX trading down about 178 points as we speak right now. Now, the DAX has really just simply been moving sideways to, in fact, slightly higher as it's been working off its overbought condition out here. Made the 1 to 1.6 when 8A to B equals CD, that kind of. Yeah, first it made the 1 to 1, moved sideways, made the 1 to 1.272, moved sideways for a few days, up to the 1 to 1.6 when 8A to B equals CD, moved sideways for several weeks. And, now it's really attempting to get up into that 1 to 2 level, 12,695. Struggling a bit this morning. Is there anything? So I don't have volume behind it, so I can't tell you if there's anything really significant behind the move. Over in Europe, if we take a look at the UK, if we take a look at the FTSE, sideways action. That's all that's going on there. It has a small A to B equals CD upside pattern that would give you a 71.36. The actual intra-session high so far today has been 71.19. Pretty darn close to it, 16 points away. The key here with the FTSE is at 69.50, 60 level. We'll see if it can stay above it. If it does, its message is clear to me. You're above the 1999 level. You've got a breakout going inside of the FTSE. If it gets back inside the 69.50, then we're uncertain. When it gets back below, it says, hey, you've got a false breakout. Doesn't mean that it can't try to attempt another one, but, would have a false breakout, some false bravado. We haven't seen the markets falling apart anywhere. Even this morning, if we take a look at the daily contracts here, let's switch over. Take a look at the daily messages, the daily contracts. Let's start off, take a look at the S&P 500, the ES Mini out here. What did it do yesterday? Now, it's trading. It's rejected the its swing point from February 25th out there. So that low is 2,100 even Steven. Of course, that's pretty easy to do it. It works in increments of quarters out there. And if we take a look at the high, 2109.75, the high wasn't tested. When you're looking at swing points, the question is always going to be, as price is moving up, is it the low or the high? We don't know. If you're pushing into a swing point with volume, odds favor, even if it hasn't overtaken it, odds favor, and you close below it, odds favor that you're going to go back up and test it. Do you have to? No, the market doesn't have to do a gosh darn thing. But what we're looking for here is we're just looking for probabilities. That's why we're pattern recognition specialists. It's about just simply what's probability management. It's why you use stops. That's why if you want to stay in this game, it doesn't matter whether you're long-term, intermediate term, short-term trader, all traders need to use stops. And you need to use stops when you're the most objective. And when you're the most objective, there's really one of 2 points. When the trade's going with you, of course, sometimes you're really not so objective there. You're most objective before you enter the trade out there. The real problem in the marketplace for 70%, more than 70% of folks around the world was that as the markets were moving down from 2007 to 2009, there was no objective stop that was put in place. There was no pain threshold. The pain threshold for many came right at the bottom. And then you were so demoralized. You're not going to get demoralized if you have some kind of stop. Even if it's just 10% below, it's a trailing stop below the actual high of what it is you're doing. Just something out there so that you can get back out, come back, reassess the market, get your information from wherever it is that you do, and then move forward out there. So hopefully, no matter what it is that you're doing, look, if you're, most people are dealing with some type of retirement pension fund where you're checking one of 10 or 12 or 15 boxes as far as what to invest in, and so you're really not managing it, so to speak. Nonetheless, just simply go back there. Go back, take a look at where it's at, and write down on a pad of paper. Write down 10% below the actual high of what it is you're doing. If there's a 10% correction, it could get worse. Maybe that's the bottom. You can always get back in. But don't let that hard-earned capital, just because what happens is you can be a deer in headlights. Knowing what to do and doing what you know are two totally different things out here. Okay, enough of it's enough. Now, so inside the ES Mini on the daily chart, it's tested that February 25th swing point. We see that the close yesterday was at 2099.75, so you had a rejection. Today we've seen a higher move. It still has rejected that level. Any close inside 2100, and it says that price will go test that 2109.75. So that's the daily chart. If we take a look at the daily chart, let's go see what's going on wave count wise out here. If we take a look at the daily chart, as price has gotten up into these highs, we can see that yesterday, if there's no other spike higher today, that yesterday was a fourth wave to the upside. Why is that important? Well, because what you and I have learned is when you get to waves 4, 5, 6, 7, out there. When you get to 4, 5, 6, and 7, that's when you can start to see reversals. Now, in the case of today, we won't know if yesterday was at the fourth wave or not. If you get a higher high, then that wave count continues. So we can see the ES Mini has made a 100% move of a move. Now, what does that mean? And I throw out terms out here. What markets will typically do is they will go from one swing point to the next. It's like, if you're inside of Macy's, and, I don't know where Macy's came from, but if you're inside of Macy's and you're going to ride the elevators, you go, let's say you're in a multi-store Macy's, not a two-story Macy's out here. You go from one floor to the next and maybe back up, what have you. Well, that's really how markets work as well. So you're always using that swing point. In this case here, it's at February 25th level. And when price gets up to that swing point, it's what we refer to as making a 100% move of the move. That's all that means. Now, price can extend beyond that. When it does, that's when it typically will form an A to B equals CD to the upside. As an example, in the case of the ES Mini, if it does take out those highs at, what was it? I don't remember the exact number, but above 2100 out here, and it closes above it, volume or not, it says, okay, price could run up to 2174. That's your A to B equals CD pattern. But it's got to get above that swing point in order for that price projection to even possibly come into fruition. So, we're looking for clues everywhere with regard to what the market is doing. That's our role. That's your role. That's my role. So we know 100% move inside the ES hasn't been able to overtake the highs out there. And potentially on the daily chart, you're in your fourth wave to the upside out there. What's going on the 300-minute chart as we take a look? That's our 5-hour energy drink that's sponsored by Saratoga Bob in our Tigers Den out here. Here's what we know about yesterday, and this is kind of interesting. We like that seventh inning stretch pattern out there. When Stevie's son is singing, take me out to the ballpark. I'm thinking I'm going to go out to the ballpark this year. And so when we sing that song, we want to sing that song because we sit right down. The markets oftentimes find that as a real stretch point and a reversal. Now, when the markets are able to take that level out, in this case here, it did. Now, we take a look at the 5-hour chart out here. Each of us have different charting services, and when these candles begin forming and ending, I have found is different when it comes to the 5-hour chart. Why? I don't know. Because what I do know is that the ES Mini opens at 6 p.m. on Sunday evening, and your 5-hour counts ought to start going from there until you've got the close, which is Monday afternoon at 5:15, and then it picks back up a half an hour later out here. But some charting services don't do that, and therefore our counts are oftentimes different. But if I take a look at the count that took place at 11 o'clock in the evening, that was back on March the March the 31st out here, and we do our wave counts. It was this day here at 2 p.m. It was April 13th when we got to that seventh wave. Well, yesterday's spike higher inside the ES Mini actually took that out on my charting application. But what was not taken out here is that rising price channel. And price has not gotten back inside there. So on a 5-hour chart, what we see is a bit of another consolidation. Consolidation out there. But that's what we've got going. And right now on the 5-hour chart out here, we've got support down at 2,087. When we get back, we'll continue this conversation that I seem to be having with myself. We'll continue looking at the ES Mini. We'll gradually move over to the S&P 500 as well. Be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's continue with this conversation out here. And we were looking at the 5-hour chart for the ES Mini. Now, so a couple different patterns that are competing with each other out here. Number one, when we left off, we were talking about that little rising price channel that had evolved. And price broke out of that to the downside back at the close here. Looks like on April the 13th. Since that time period, what we've seen is just really a move sideways. We saw price moving with inside its TAS market profile, then break out yesterday while I was driving up to Gainesville. But there's another pattern, so that it hasn't been able to break back inside there. At this stage, because we're moving sideways, I'm going to kind of leave that pattern off to the side and say, recognize that it's there. But there's a more prevalent pattern. Number one, as I mentioned, with that spike higher yesterday, broke through that seventh wave. When you break through a seventh wave out there, what I have found, my experience is that it just simply shows you the strength of the market. You may not agree with the strength of the market, but, the actual arbiter of the market is price and where it's headed to. And what there's another sideways pattern. That's these dark black lines going across my screen. And that's really a consolidation area. Now, I'm just using the bodies of the candles out here versus the extreme emotions, the wicks. But basically, the consolidation pattern is between 40 to 50 points. The one I'm showing is about 40 points. And we did see a breakout of that level. We saw price come back and test it back here at about 2 o'clock in the afternoon, April the 14th, and reject that area. And as long as price stays above it, much like when I talk about the FTSE and what it's doing, it's really got a similar message. It says that its message is that until price breaks inside there, back inside there, it could fulfill that consolidated move out there, that price objective. That's called a measured move. Well, that would say that the ES Mini would like to travel up into the 2120-ish type level out there. So that's the message that I see on the 5-hour chart. But there's different messages, and it really depends upon the time frame that it is that one trades upon. And so if you are a trader that doesn't mind getting in and out, well, then you've got other messages to take a look at on shorter time frames, such as the 120-minute chart out here. Now, the 120-minute chart actually did form a 7th wave yesterday to the upside. Not only did it do that, it moved higher with less relative strength out there. Whenever a market moves higher with less relative strength out there, it says it's tired. It doesn't have enough to get over that next hurdle out there, and it's going to pull back. Well, on the 120-minute chart, you can see the red lines now, in this case, horizontal going across my screen. That's the consolidation area as well. So price, it needs to get back inside there to prove that the breakout is false. Net price is not going to run to 2120. Of course, if we see any takeout of the high here from yesterday, which, by the way, that high from yesterday is 2105.50, you'll have another failed 7th wave pattern of the upside. And I would say at that stage of the game, really everything is pointing to that 2120-ish plus type level out there. So right now we have the, so the question is, are things just on sale? Is Macy's throwing a bit of a sale? See, the market, it works just like a retail store out there, and you've got to determine whether it is you want to buy retracements in an uptrend. And let's face it, this market is still in an uptrend. There's nothing that has changed there whatsoever. We've just got these, because the markets aren't going to just go in one direction, we have these markets that show us when retracements ought to occur. And that helps you, if you are trading on an intraday basis, or just simply try and understand what the markets are doing, or apply these to longer term charts. 30-minute chart here for the ES Mini, not to belabor a point, but it too, as it was making, then you had a little hammer candle, which we talked about a couple days ago, when price was moving lower, and of course it was moving lower with less relative weakness out there when it formed that hammer candle. Now what it did, since that hammer candle had formed, it also made a 7th wave to the upside. Now it's only made this little 3rd wave to the downside, so it's not out of the woods with regard to the market moving down, but really is going to have to break through that consolidation box and get back inside there for us to know that maybe there's something a little bit more serious with price moving lower for the next several days out here. So that's taking a look at the ES Mini and what's going on there. In summation, what does that tell us? It tells us if yesterday's highs are taken out, that the ES Mini is going to head to that 2120 level. Real simple. Tells us on an intraday basis that we got a little bit of a timeout. Has that timeout completed with regard to forming a bottom? I don't know the answer to that as we speak right now. If I go and take a look at one other thing before I switch over, and we'll take a look at the S&P 500, we'll go do kind of a similar thing for you. Not completely, but something similar when we get back from this next breakout here. But what I will add is one other component to the fuel boosters out here, to the rocket boosters. It is the Euro-Japanese yen. And if we take a look at it, it has tried to break its B point, its swing point from March 13th on 4 separate occasions, with today being the 4th occasion, and has not been able to bust it lower. If you're bullish, that's what you wanted to see. You did not want to see that level get taken out, get broken. This is Steve Rhodes with TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 31 points, trade out at 18,081. S&P off 5 at 2101. Composite down about 10 points at 5,001. Russell's off about a couple bucks. DAX off 165. FTSE down 18. Gold's up $2. Silver up 9 pennies. Light sweet crude back $1.12 as we speak right now. Leading the charge, the upside. Netflix up 62. Buckaroonies up 13%. Panera Bread, it's y'all get it out. Don't worry about it. His bread is certainly rising there. The yeast is rising, up 12%, up about $20. Granger WW up about 3%. Philip Morris up $5. Anthem up $3.74. United Health Group up $3.50. Leading the charge to the downside, Pacira Pharmaceuticals off 7%, down about $7. SanDisk off $5, off 7%. Heartwire International off $2.50. You got the Matador RES. I don't know if that's a restaurant, reservation, options, resources, probably resources I'd go with. That's off about 6% this morning. Now, let's go back and just to complete the conversation that I'm having with each of you. Not myself, thank you for reminding me that, in the S&P 500. So in looking for clues, so just to summarize here, we take a look at the daily chart. If you remember the S&P futures, it was potentially in that fourth leg to the upside. We know we had a failure pattern in that G leg on the 5-hour chart, but not so fast with the 120-minute and the 30-minute charts out there. So we've gotten enough signals to say, hey, a rest is in order for the potential rest for the markets is in order. Now, what's the message coming from the actual cash index out here? And you like to have synergy. I mentioned synergy out here. So let me put the cash out here. And we take a look at those fourth wave patterns out here. Really important. This is like, when we take a look at this chart here, let me do this. Let me actually turn off the Rhodes Momentum trade signal indicators. Give me a second to do that. I'm going to do that off screen. It's a little bit easier to do that, and you don't get to see all of Stevie's special formulas. So that's another reason for doing that. So give me a moment to do that. Where did I put that? I'm going to try to do that. There we go, anchor. And we'll turn off the trends. That's why you don't necessarily have to see the colors, and you'll be able to more clearly see the letter mark notations out here. Okay, so now let's put the S&P 500, the cash index, up here. Now, and taking a look at this is like going to the Arthur Murray dance studio of Chapman wave counts out here. Arthur Murray. Any of you guys know the story of Arthur Murray? Kind of interesting story out there. I think he passed away about 15 years ago or so in Honolulu. Hey, when you're gonna kick the bucket, not a bad place to be kicking it, so to speak, out there. But he was born where? In the kingdom of Galicia. You got to go ahead and look that one up, folks. In any event, let's go take a look at the Arthur Murray dance steps out here with regard to the Chapman wave counts, that letter D, not G, but that letter D that we're looking at. So if we come back and we take a look at the, let me get my cursor out here. We come all the way back to the high that was formed on December 29th. You can see that the market went ahead and did what? Made four moves down to the four wave counts down to the bottom. That letter D before it went ahead and traversed and reversed out there. What did it do as price went ahead and made a move up to February 25th? It made a fourth move to the upside. What did it do from that point? It came down and made a fourth move to the downside on March 11th. What did it do? It went up and it made a fourth move up into March 23rd. Now, when it came down here recently, back on March 26th out here, it did not make four moves to the downside. That's because it looked like maybe instead of Arthur Murray or one of his students dancing, that was probably Stevie dancing. Not a big dancer out there, but I can move and groove. The problem is people aren't exactly sure what it is I'm moving and grooving to. Nonetheless, it's all in the mind out there. Now, if we take a look and we just start from that account there on March 26th, yesterday may have been a fourth count to the upside. So from a probability standpoint and looking for clues as to what the market might do, you'd have to say if yesterday's high doesn't get taken out, and we've got that seventh wave count to the upside in the 30-minute and the seventh wave in the 120-minute, and those don't get taken out, pretty good chance we're going to see a move to the downside. Does it last for four waves? I don't know how many waves it does. I'm just saying, hey, let's go back and take a look at what the S&P 500 has done since December 29th out there. You know, and there are clues, which you can ignore. You can say, something to think about. I would rather you say something to think about. So if yesterday's high does not get taken out, boy, is this the long-winded approach to explaining to what's going on? Probably not, because we've got to really take a look at all these pieces of information. And quite frankly, since I was on the road for about 18 hours yesterday, from soup to nuts when it was all said and done, hey, I need to go through this process. Anyways, you know, you're away from a screen for a day, you got to get reacclimated. And you should always get reacclimated to your screens anyways. You should always come back and take a look at new potential patterns that are out there. So if yesterday's high doesn't get taken out, pretty good chance you're going to see a retracement. Now, where's that retracement going to take us to? How long? We'll come back here. Let me just come back here and take a look at it. what we can see is, we have seen higher lows each time here off of this February 2nd level. So I would say at this stage here, you would want to go ahead and expect that you would also see a higher low inside of the S&P 500. And you come back and maybe take a look at volume inside the SPYs to see what's going on inside the SPYs as well. So those are the patterns. I hope that answers the question from one of our viewers, one of our listeners out there, with regard to the S&P 500. Now, I know the question I haven't answered yet, which was, I saw a question posted in the den, which said, any cycles that I see coming in the future out here, cycle date, something along those days, really with regard to when to be expecting a turn. So I'd say if we see the markets move lower today, potentially 4 waves to the downside. So it would be one thing to be looking at. Now, the 4 waves to the downside are not going to fit into my cycle pattern out here. And so that says, okay, we got to really focus and pay attention. And what is it that Stevie is looking at? I'll show you this one slide right here. And we take a look at this. And I like to understand what's going on seasonally, what the average is, what's the probability, what does the market do on average out here? And if I can, where'd that come from? Slideshow. There we go. So from this current slide, let me put this slide up here on the screen. Now, you're taking a look at the Dow. You're welcome, Z, and the Den. When you take a look at the Dow out here, there's a potential seasonal pattern that we have that's ongoing here in 2015. It's potential. I can tell you that years ending in 5, going back the last 80 years, that's what this chart is looking at. Over the course of the last 80 years, the market makes a high right around right here. By the way, I'll give you an exact date. I got to do that on a different screen out here for that to occur. That's right around March the 6th. Let me come back out here, and I don't think we have a true analog going, but let's go see what was the S&P doing around March the 6th. So it was really February 25th. March the 6th, it had already started a pretty decent downtrend. That was really our downdraft session that we had inside the S&P 500. But we kind of use this as a guideline as to what the market does. Now, if we come back and we take a look at it, so you can see, it makes a now. This is from a directional standpoint, so I'm not going to get too caught up into whether lows are taken out. But if somebody were to ask me what's the next cycle date that's out here that the market does on average, it really gets to be this point right here. And this point right here says April 21st. Now, many of you out there know that I was calling for the market to go ahead and put in a high and move down into April 21st. Many of you might have been wondering, where the heck where is Steve Rhodes pulling that out of? Well, now you know. I just gave you one of my magic tricks behind the secret curtain out there. Not that it's really so secret. So the market is going to retrace. I'd say that it's going to retrace probably into sometime next week. The 21st, I believe, is what? Is that Tuesday of next week? So sometime next week is really what we would use as a guideline. If the market takes out its highs, I can tell you there's another pattern out here. I got this little fly roaming around in here. Not even a fly, it's a mosquito. Flies aren't so bad. Mosquitoes, they bite you and then they make you scratch. We don't like that here. In any event, I don't know. Hopefully that helps you out. So if I'm looking for any kind of cycle, it's some cycle that comes in the early part of next week on any move down. If we've got that fourth leg confirmed today, pretty good chance we're going to see some kind of retracement. If it's going to be 4 legs, it's going to be beyond next Tuesday. It just has to be. So that hopefully that covers everything with regard to the S&P 500, what it is that I am looking at, what it is that you should be looking at as well out there. Now, let's go back and take a look at the, and if you've got other questions, again, feel free. You can call in. You can go ahead and send me emails. I'm going to actually do that. No, I see I've got somebody here as I take a look at the email says they actually took dance lessons, maybe with Arthur Murray out there. Let me see. Yeah, at his studio, for those of you in the Detroit area, 7 Mile and Livernois. Now, that's a good place. Now, that's a pretty good corner, but there's an even better corner out there, and that was at 8 Mile. I think it was also at Livernois. It's been so long. I've been away from Detroit for 30-some-odd years out there, but that's where Baker's Keyboard Lounge was at. That's why I first met Earl Klugh. to really date myself, almost 40 years ago out there. How about that? In any event, okay, let's go take a look at these markets. Enough with the conversations with myself. So you got the Dow's off 20, S&P is down a couple, and you've got the composite, which has turned just slightly green right here. The Russell's off $1.80. Let's go take a look at some of these stocks that are moving in the markets. Then we sort of covered the currency pair, but let's go take a look at stocks here in the market for the next few minutes. Let's go see what's going on in Netflix. We saw Netflix really take off topside a few days ago, I believe. We did, and we saw that gap up. Let me go ahead and get rid of these retracements out here. Let me do this. And as we do, so we know that Netflix has a big, strong move out here. That strong move coming inside with volume, wide price spread, January 21st. Big move. Volume there is 9.5 million shares. Hey, you've got a huge move going on today, probably even more than 9.5 million shares as it gaps up and takes out its swing point. The A to B equals CD pattern as an example inside of Netflix out here. We go take a look at it. It's got a price projection. Looks like somewhere around, come on, work for me, work with me. The 1-to-1 A to B equals CD takes you to 579.66. The way you take out the B point, the way that it's doing it, Netflix probably on its way to 625.80 out there is likely its move. Of course, it had a nice move here a few days ago, April the 13th. So that was the beginning of the week. 6 million shares to the upside. You've already done 3 million shares here today. So Netflix truly on fire. Let's take a look at Panera Bread, PNRA. It's up 18 bucks, up 11%. Also out with their earnings, I would believe, but I don't see their numbers. It's just really just on an upgrade alert for Panera. Let's go take a look at it. Now, Panera, this is a pretty impressive move, considering that, no, it's not a 50. It can't be. No, maybe it's an earnings date. I don't know why my earnings dates aren't on here. Let me go change that. It makes me kind of fly blind. I don't like to do that, but give me a minute here. Earnings date. Show my earnings labels. There we go. Okay. At least I know when the earnings took place. Now, in the case of Panera Bread, this thing broke down big time. 3.8 million shares out here back on February 21st. Normally that's a pretty nasty sign. If it can stay above the swing point here from February 11th, and the top there is 179.03. And it can do with similar type volume than that breakdown, than the real markdown of 4 million shares on February 12th. That would really do a lot to repairing its stock chart out here. But I take it back. I take that back. Oh, I digress. Let's do this here when we take a look at Panera. You always got to go back a little further on the stock chart in order to really get the picture. So we went back a little further to the left. I'm going to turn a couple of things off. That way it makes it a little bit easier for you to see out here. But take a look at Panera Bread. What it's done here this morning is it's gapped right up into its sign of weakness, its real sign of weakness, its volume off of the highs back on March 26, 2014. So it has not closed that window. Hey, closing above 184.01 will go ahead and repair its chart and says that price should go test the high from March 21st, just a bit higher, 193.18. Failure to do that out here, and as Schultze would say, very interesting. So Panera Bread gapping right up into a supply line. Let's go see what else is moving out here. Let's see percentage-wise. What do we got? The biggest, Philip Morris. Let's go take a look at PM. As we take a look at Philip Morris, before we go into this break, gapping up, I didn't see, probably out with numbers out as well. Philip Morris moving higher, 3.1 million shares this morning. What is this thing running to? It's probably running to at least this swing point out here from January 22nd. So Philip Morris on its way to 85.29, 84.43 out there. It's got good volume. That swing's only got 6 million shares. It's not near it, but it's moving up into it with some really good volume as we speak this morning. Hey, I still have 30, 40 seconds left. I can do more charts. So, let's take a look at SanDisk out here. SanDisk is 7%, down $5. Let's go see what it is doing. This thing has had some real trouble out there. It must be because it's given away everything out there. Thank goodness for SanDisk. SanDisk, let's see, what kind of gap? One gap, a second gap, a third gap. The third gap to the downside out here that took place on March the 26th really should be, looks like visually, looks very close to a three-gap play to the downside. But, it's moving down this morning. The volume behind the move, 6.2 million shares. It's trading inside that swing point from April 1st, only 7 million shares. Could be headed much, much lower out here. I'll have to look at that during the break. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Back on SanDisk. So SanDisk does have a A to B equals CD price projection, 1-to-1 A to B equals CD on the weekly. That ought to take price down to about 55.09. 55.09 is its 1-to-1 could conceivably move lower than that. It needs to go ahead and take out the most recent lows out there, but most likely will go ahead and play out and do that. So that was on SanDisk. So let's just summarize the market out here. I spent really the first half hour taking a look at really the S&P futures and the S&P index out here and looking for patterns. We're always looking for clues. You and I truly are treasure hunters out there, right? We're looking for morsels of information, and that's the beautiful thing here at TFNN, because there are plenty of tools that we have inside our toolbox. You like to see things kind of synergistically confirming things, but it doesn't really always work that way. So you've got to go with what it is that and you've got to take the trade, and you've got to go ahead and use stops out there. And when you get stopped out, you just simply, it's like getting knocked down. If you're a hockey player out there, you know what that means. You're going to get checked into the boards, and sometimes it's going to hurt more than others, but you get back up on your skates. That's what you do, and that's what you do in life out here. So that's why you use stops. Now, if you use stops, you're not going to get slammed to the boards too often where it hurts, other than your stop getting jumped every now and then. But just pick yourself back up. Go look at those patterns. What we know with regard to patterns that we've got out here is we've got a version. We've got potential. We've got topping signals. Not even potential. We've got topping signals in the ES Mini on the 30-minute and 120-minute charts, period, that have worked well in the past. What's the extent of the retracement? Well, then you shift back to the daily. You've got that fourth leg in the daily and the ES Mini. You've got it in the S&P cash, and we know that those have led to, typically since January, 4 legs to the downside. Only once has it not done that. That says we have a retracement. Is it going to be into next week on Tuesday? I don't know. Is it even going to happen? I don't know. If the highs get taken out, here's what you can expect: a move into the 2120 level inside the ES Mini. Hope that helps you out. Stay tuned for the second hour of the Trader's Edge show. But in between, we've got our man Tom O'Brien. He'll be up giving his market minute. Have a great Thursday if you're off to start your day. Look forward to seeing you soon. Take care, folks.